Good afternoon, my name is Jordan Lambert, Market Analyst at Gelatama Management. Writing the report this week really does feel like a broken record. The analysis is pretty much a repeat of previous analysis because the market continues to be range bound. The Organisation for Economic Cooperation and Development has lowered global growth forecasts, and the IMF, the International Monetary Fund, has lowered its growth estimate for China, which has caused investors to trim down risks in equity markets. One must wonder about the sustainability of the US equity rally, given that global growth is in a dire situation. Some parts of the globe we have no growth, like in Europe, or in other parts, like China, we have slowing growth. So it does make you wonder how long this US equity rally can continue to run for, just based on US data. If we do finally get an equity correction, contrary to popular belief, gold could actually make some gains. As I've mentioned before in a previous video, fund managers would diversify to manage the risk and the uncertainty. They would diversify portfolios more into commodities, which could benefit gold. So bear that in mind, and also bear in mind that we have never been in an environment where such a scale of stimulus is either being tapered down or removed. Therefore, we will be in uncharted territory when the Federal Reserve do start to taper down their stimulus, because it hasn't happened before. Nobody really knows how the economy is going to react, how the equity markets are going to react. So it's there's a lot of uncertainty, and gold can benefit during uncertainty. So that's good information to know. Let's just take a look at the charts right now. I have a 30-minute chart up here. Price is hovering again just under 1400. It's currently 1395. This morning it did test as high as 1397.8, but was beaten down by the bears yet again for the umpteenth time. We can draw a bullish channel here with these two red lines, and this just manifests the short-term sentiment at the moment, which is bullish. This developed yesterday. But do be aware. I've noticed this a few times now. When prices spiked sharply up towards this resistance at 1400, the bears have beaten it down pretty quickly. So a good indication of a longer weighted breakthrough would be if price steadily inclines towards the 1400 level and maybe tightly consolidates just under 1400, maybe between 1397 to 1400. This would be a much better setting for a longer weighted breakthrough than a spike of $10 towards this level. So look for that, that will increase the chances of a breakthrough. If the technicals do not take control today, then tonight we have US GDP at 8:30, and we also have US pending home sales at 10 p.m. So that could eventually move us out of this range bound market and hopefully pushes up above 1400. Given the potential rewards of a breakthrough, it is worth a risk buying, because you can place, if you do buy on a pullback maybe between 1390 to 1394, you could place your stop just below the previous higher low at 1388, which is here, and this would also be below the bottom side of the channel, which is acting as the short-term bullish trend line. So you'd be risking maybe between $5 and $7 possibly, but the potential reward is quite great, because as I've mentioned in previous videos, where there'll be a lot of short stops accumulating just above 1400. So if the bulls can penetrate this level convincingly, this will trigger a lot of short stops, and momentum will build. So the risk to reward is very favourable for a trader, and it's worth a risk. Looking for shorting opportunities would be if the low down here 1373 is broken. That was achieved. That was formed Tuesday night. But we are quite a few dollars away from that at the moment, so definitely be looking for bullish opportunities as we are so close to resistance. So trade carefully. Thank you very much for listening to me, and I'll speak to you again same time tomorrow.